SpaceX is about to go public, and it's not just any other IPO. This could be the biggest one in history. We're talking a $1.75 trillion valuation, $75 billion raised. For context, Saudi Aramco held the previous record at around $30 billion. And SpaceX, well, they want to more than double that. But here's what nobody's actually breaking down. What is it that you're actually buying? Because this isn't just a rocket company anymore. And the numbers behind the IPO, they tell a very different story than the hype. So here's where we are right now. SpaceX filed its confidential S1 with the SEC on April 1st. The financials are out. And the investor roadshow kicks off on June 4th. That's when SpaceX management pitches these deals to institutional money. Pricing is expected on June 11th, and trading could begin as early as June 12th on the Nasdaq under the ticker SPCX. Goldman Sachs and Morgan Stanley are reportedly leading the deal, but there are around 21 banks involved. This, by any means, is absolutely the most anticipated IPO of all time, at least of the decade. Now, one important detail. Reports suggest SpaceX may allocate up to 30% of shares to retail investors, roughly 3 times the normal allocation. So, unlike most mega IPOs where the retail market gets scraps, there might be an actual opportunity to participate here through your broker. This is the part that actually matters, because when you're buying SpaceX, you're not only buying rockets. You're buying 3 very different businesses under one roof, and they all have very different financial profiles. Business number 1, Starlink. This is the money machine. Starlink crossed over 10 million subscribers as of February 2026. It is now in over 160 countries, and the satellite internet service generated roughly 11 to 12 billion dollars in revenue back in 2025, that is, and its operating income more than doubled. And here's why analysts love it: because it's subscription revenue, it's recurring. People pay every month, so it looks more like a SaaS business than a rocket company. Maritime, aviation, government, and defense, all high margin segments growing fast. If Starlink were a standalone company, analysts would put a price tag or a valuation of this company at around $400 billion to $1 trillion on its own, that is. By far the most bankable part of this IPO. Then we have business number 2, launch. SpaceX dominates launch. In 2025, they flew over 150 missions with the Falcon 9, that is. Every single payload delivered successfully. And they accounted for over 80% of all global rocket launches. That's not a market leader, that is pretty near monopoly. They hold major NASA contracts, including the human landing systems for Artemis. They have defense contracts and the running for the Golden Dome missile defense project. This is a deeply entrenched business with very real barriers to entry. And then there's Starship, the next generation high-load rocket that's still in development. They have 5 suborbital flight tests during the last year, 2025, with the last 2 described as perfectly successful. Starship is the key to the Mars ambitions, but also to much cheaper satellite deployment and potentially, of course, more advanced space infrastructure. It is a massive opportunity, but it's also, of course, a massive capital expenditure that hasn't been commercialized yet. Business number 3, and here's kind of where it gets complicated. xAI. In February of this year, SpaceX merged with Elon's AI company xAI. This was an all-stock deal valued at around $250 billion. xAI owns Grok, the large language model, and it also absorbed X, the social media platform formerly known as Twitter. So now you have rockets, satellites, AI, and social media, all under one ticker. One vision is space-based AI data centers, powered by Starlink, ambitious, and also very, very expensive. xAI contributed with around $3.2 billion in revenue last year, but burned approximately $14 billion in cash, pocket money. And yes, you heard that right. The AI division consumed more money than SpaceX's entire register of operations combined. And this merger is very important for the numbers here. Before the merger, SpaceX posted almost $800 million in profit in 2024. After the merger, the combined entity posted a loss of almost 5 billion in 2025, and the entire swing comes from XAI. Okay, let's talk numbers, because here's where you need to be honest with yourself. SpaceX is targeting a valuation of $1.75 trillion. Some suggest that the price could be even higher, above 2 trillion on day one. Let's put that into perspective. Nvidia around 4.6 trillion, Alphabet around 3.9 trillion, Apple 3.8, Microsoft around 2.85, Amazon 2.6 trillion. This means that SpaceX on day one would land somewhere around the 10 most valuable companies on the entire planet, and probably other planets too. A company that did $18.7 billion in revenue last year would be on the same page as companies doing $500 billion in revenue. And no, I wouldn't call this criticism, it's more context. And context obviously matters when you're trying to make a decision whether to buy or not. Now, let's break the valuation into its three pieces, because that's really how institutional investors are pricing this in. Starlink. Analysts value this at around 1.1 trillion. That's the subscription business, the recurring revenue, the SaaS-like margins. Starlink's EBITDA margins are estimated somewhere around 50 to 63%. This is the part of the valuation that has the most real numbers behind it. The launch business, roughly 400 billion. Entrenched monopoly position, government contracts, Starlink optionality. This is real revenue, real customers, but also, of course, heavy research and development spend on Starship that hasn't generated any commercial returns yet, and probably won't for a while. XAI and the AI thesis, roughly 250 billion. And this is more where you're paying for a vision. Space-based AI data centers, the Grok factory, the Grok model, the Terafab chip initiative with Tesla. But right now, XAI is burning through around $1 billion per month. And that's not a rounding error. That's a fundamental part of the cash flow right now. Add those up and you'll get the 1.75 trillion valuation. But here's the math that should make you pause for a second. The 2025 revenue, 18.7 billion. At a $1.75 trillion valuation, you're paying roughly 90x revenue. For comparison, Nvidia at the previous AI peak topped out at around 70x EBITDA. Pretty insane. Meta, Google, Amazon, they're all in the 15 to 30x range. To justify this valuation, even at a 12x valuation, which is already quite generous, SpaceX would need to hit around 150 billion in revenue by 2030. This would require Starlink to keep doubling. It would probably require Starship to become commercial, and of course XAI to start generating cash instead of burning it. It would also have to mean that nothing really can go wrong. One more thing that we need to take into account, which is the float. This is the proportion of stocks available to the open market. Because Musk, the employees, and the long-term backers, well, they own the majority of the shares. So the freely tradable supply of shares will be fairly small compared to the total amount of shares. And a fairly small float plus a huge demand can absolutely send the price upwards on launch day, literally. Way past the fundamental values, if they even exist. And then there's the index effect. If SpaceX qualifies for the S&P 500 quickly, passive funds and a lot of institutional capital will be basically forced to buy, creating another wave of demand that has nothing to do with the business itself. That's great if you got in at the listing price, but probably pretty dangerous if you're chasing the stock on day 2 or 3. Is SpaceX worth the $1.75 trillion? Maybe. And over a 10-year period, if everything executes, of course. But you're paying today for a future that almost requires near perfect execution across rockets, satellites, AI, and chip manufacturing simultaneously. Know that going in. Quick note on a name worth watching if you're already a little bit into the space industry but want something on a lower valuation that's a bit more established. Rocket Lab, ticker RKLB. Record revenue in Q1 2026, this of $200 million, 63.5% up year on year. They signed 31 new launch contracts alone in Q1, more than all of 2025. The big catalyst for this company, their Neutron medium lift rocket, targeting its first launch in Q4 this year. 5 dedicated contracts for a rocket that hasn't flown yet, and at $50 to $55 million per launch versus Electrons at 8.4 million. It's a completely different revenue tier. Worth taking into consideration is that when a company like SpaceX goes public, at this scale, institutional capital is likely to flood into the entire space sector. And companies like Rocket Lab will most likely benefit from a flood like so. And there are, of course, other names in this space, pun intended, too. AST Space Mobile, Intuitive Machines, Redwire, Planet Labs. I'll do a deeper dive on those in a different video. Look, this is one of the biggest IPOs in history, and SpaceX is absolutely one of the most impressive companies there is. Starlink is a cash machine. The launch business is a near monopoly, and the long-term interplanetarian vision, Mars, space-based computing, global connectivity. I mean, it's genuinely breathtaking. But a great company and a great investment doesn't have to be the same thing. At 90x revenue with a $4.94 billion net loss and an AI subsidiary burning $1 billion every month, you need to know exactly what it is you're buying and what you're paying for it. Read the prospect, not the headlines, not the Twitter takes. Get a good feeling for the vision and strategy. It's a very, very interesting case, and you're going to learn a lot from it. Look at the Starlink unit economics, the XAI cash burn, the lockup schedule, the float mechanics, and how they're planning to use their money. The SpaceX IPO will be the most talked about financial event for the entire year. Just make sure you understand the business before you get caught up in excitement. I'll see you in the next one.